Hello and welcome students. In the last video lecture, I had explained you chapter number 2, final accounts of partnership firm. In that we had done last question, that was question number 11. Now in this video lecture, I am going to explain you question number 13 of your textbook, that is on page number 82. Okay, as you can see on the board, I have prepared the revised trading account, then afterwards P&L account, P&L appropriation account, partners current account and balance sheet as on 31st March 2017. So these are the basically accounts and balance sheet that we have to prepare in this sum. Okay. Now let us read the instructions. Let us read one by one the entries from the trial balance and we'll do the posting in the related accounts. The first entry on the debit balances, that is drawings of Harsha and Chaya. There are two partners, that is Harsha and Chaya. The profit and loss sharing ratio over here is not given to you. So it is to be distributed equally amongst both the partners. Okay, now drawings, that is of Harsha and Chaya, both the dates are given different. One partner is withdrawn on 1st October 2016. So interest on drawings, that is in the adjustment. So we have to count interest on drawings for Harsha for 6 months and for Chaya that is for 3 months, because it is on 1st January 2017 and our accounting year ends on 31st March 2017. So 3 months interest on drawings that we have to count for Chaya, and for Harsha that we have to count for 6 months, because from October. So October, November, December, January, February and March. So in case of Harsha, we have to count interest for 6 months. Okay. At present, we'll just do the posting of the drawings in their partner's current account. You can see in the partner's current account debit side that I've written, you are very well aware that whatever the interest on capital or capital that we are posting in the partner's capital account, but whatever the drawings that we will be posting in the partner's capital account. Now over here I have prepared only partner's current account, because already we have discussed that if in the question the balance of current account is given of the partners, then all the entries other than the capital is to be mentioned in the partner's current account, and the capital would remain fixed. It means whatever is the opening balance, same amount of capital would remain in the closing balance also. So you can see in the capital, in the liability side, I have already written the balance of capital, that is as it is given in the trial balance. You can see in the credit balance capital account of Harsha and Chaya, that is given to you 20,000 and 30,000. So as it is, I have written 20,000 and 30,000, total in outer column 50,000. So capital account, there would be no any change. Any of the entries related to partners will be mentioned or will be shown in the partner's current account. Okay. So over here you can see in the partner's current account debit side that I have written two drawings, that is 5,000 in case of Harsha and in case of Chaya that is 10,000. Then afterwards current account, that is balance given to you of Harsha, that is 6,000. Now that is given to you debit balance of Harsha. So if there is debit balance of Harsha, then it will be shown on the debit side. So you can see the first entry, always the opening balance, whether it may be debit or credit, it will be shown as the first entry. So two balance brought down in case of Harsha, that is 6,000. Now simultaneously on the credit balance also you can see current account of Chaya, that is given to you 4,000. So it means it is a credit balance. Okay. So credit balance will show on the credit side of partner's current account, first entry by balance brought down in case of Chaya, that is 4,000. Okay. Now again in the debit balance, next entry, that is interest on capital, that is of Harsha and Chaya, that has been given to you. So interest on capital, that will be one kind of expense for the firm. So in P&L appropriation account, that will be shown on the debit side, P&L appropriation account, and for the concerned partner it would be a gain. Okay. So first of all, to interest on capital. Now over here interest on capital is given to you in trial balance, and also in adjustment is also given to you. So whatever that is given in the trial balance, that will be having only one effect, and that would be on the debit side of P&L appropriation account. So you can see two interest on capital of Harsha that I have written 700, and for Chaya that I have written 1,000. See, already the same balance has been given to you of Harsha, that is 700, and of Chaya, that is 1,000. So I have written in inner column because there is an adjustment, outstanding interest on capital in the adjustment. So that we have to plus over here, and the total balance that we have to show in the outer column. So at present, whatever in the trial balance that I have written in the inner column, that is 700 and 1,000. Then afterwards Machinery that is given to you 40,000. So on the asset side of balance sheet, machinery in inner column because depreciation is there in the adjustment. So 40,000 in inner column. Then afterwards, interest on loan that is given to you 200. Interest on loan that will be shown on the debit side of P&L account to interest on loan that is given to you 200 rupees. Okay, so as it is interest on loan that is written 200 rupees. Further, salary that is monthly rupees 1000, and in the outer column that is given to you 13,000. Now students, monthly rupees 1000, it means for 12 months. Our accounting year that would be of 12 months. Okay, from 1st April 2016 to 31st March 2017. Okay, but over here in the outer column the balance is given to you 13,000. It means instead of 12,000, extra 1 month salary has been paid. Okay, so that is not of the current year, so we have to subtract that much amount of 1 month salary from the current year P&L account. So you can see on the debit side of P&L account I have written 2 salary that is 13,000 that is given to in trial balance minus prepaid salary that is rupees 1000. This is a hidden adjustment. It is not given directly in the adjustment, but internally in the bracket the data has been given to you, so we have to calculate the hidden adjustment and give two effect of this entry. So minus prepaid salary that is 1000, because for 12 months that would be 12,000. So for 1 month that would be 1000. So that is extra salary that is of the next year. So from the current year we'll subtract minus 1000, and outer column we will show 12,000. Okay, and the second entry of that prepaid salary would be on the asset side of balance sheet. Already we discussed that adjustment would be having two effect, one debit and another credit. Here you can see I have subtracted on the debit side, it means credit effect I have given. So the second effect that would be debit effect, that is on the asset side of balance sheet, prepaid salary rupees 1000. Then afterwards, salary of Chaya that is rupees 5,500. Okay, now salary of Chaya you can see that is related to partners, so it will be shown in the P&L appropriation account. Any kind of salary, bonus or commission related to partner, then it will be shown in the P&L appropriation account. Okay, not in P&L account. So to salary of Chaya that is 5,500. I have written in inner column because there is an adjustment outstanding salary of Chaya. Okay. Then afterwards debtors that is given to 15,000. You can see debtors, there is no any adjustment, so directly in the outer column on the asset side 15,000. Then afterwards receivable rent that is 2,000, that will be only one effect because this is given in the trial balance. So receivable rent already debit balance is given, so on the asset side receivable rent that is rupees 2,000. Then afterwards bed debts that is given to you 1,300. Now bed debts is given to you in trial balance, so only one effect of bed debts that would be on the debit side of P&L account. You can see 2 bed debts that is 1,300. Then afterwards stock of goods, again it is given in trial balance, only one effect, that is asset side of balance sheet. Value of stock that is given to you 10,000. So you can see in the closing stock value that asset side that I have written that is 10,000. Then afterwards insurance premium that is given to you 2,000. Now insurance premium that I have written on the debit side of P&L account, that is one of the expense. Now minus prepaid that I have written 300. How this 300 came? You can see in the bracket it is given to you, out of which rupees 1,200 is for the year ending on 30th June. Our accounting year that ends on 31st March. So extra 3 months salary is included in this 1,200. Okay, 1,200 is for 12 months, but the year is ending on 30th June. But we are accounting year that ends on 31st March. So 3 months insurance premium has been paid in advance. So for 1,200, if it is for 12 months, then for 3 months it would be 300. Okay, again repeating, for 12 months if it is 1,200, then for 3 months it would be 300. Okay, so here I have subtracted the 3 months insurance premium, so minus prepaid insurance premium, that is 300. So 2,000 minus 300, that would come to 1,700. And the second effect of this prepaid same as salary, that is on the asset side of balance sheet, minus prepaid insurance premium, that is rupees 300 on the asset side of balance sheet. Okay, now debit balances that we have cleared. Now moving on to the credit balances. First entry that is of capital, already that we have done on the liability side of balance sheet as it is. Current account also we had done the opening balance of Chaya. Then afterwards interest on drawings that is given to you of Harsha and Chaya, that is 150. This is given to you in trial balance. So only one effect of this interest on drawings. Okay. So as interest on capital or interest on interest on current account balance that you are writing on the debit side of P&L appropriation account, in the same way, whatever the interest on drawings, that would be an income for the firm. So it will be recorded on the credit side of P&L appropriation account. So by interest on drawings, Harsha and Chaya, both the amount that I have written in inner column because adjustment is there on it. Okay. So Harsha, that is given to you 100, and for Chaya that is given to you 50. Okay. Then afterwards, loan of Harsha from 1st October 2016, that is given to you 10,000. So loan will be shown on the liability side of balance sheet, that is rupees 10,000. Then afterwards in bracket the adjustment is given, that is date is given to you 1st October. So for 6 months interest you have to count for 10,000. For 10,000 6%, then it would come to 600, but already interest on loan that we have paid, for 6% that would come to 600. Out of that we have to count for only 6 months, so that would come to 300. Out of that 300, already 200 interest on loan has been paid. As you can see over here, to interest on Harsha's loan, that is already in the debit side of trial balance, already we have paid, that is rupees 200. So outstanding interest on loan, that would be only rupees 100. So 200 plus 100 total would be shown in outer column, that is 300. And that outstanding interest on loan, you will be showing the second effect, that is on the liability side of balance sheet. Okay. Then afterwards, loan of Harsha completed. Next, rent, that is the credit balance. So rent received, that is an income for the firm. So that will be recorded on the credit side of P&L account by rent, that is rupees 12,000. Then afterwards, creditors, that is 5,000, liability side of balance sheet, creditors 5,000 in outer column because no any adjustment is there on it. Okay. Then afterwards, trading account, that is 24,700. It means the opening balance of trading account that has been given to you. So I have prepared the revised trading account because there is one entry that has been missed out while finding the gross profit of the trading account. So again I have prepared the new trading account. That's why the word revised trading account has been mentioned over here. Okay. So I've written the opening balance, that is by balance brought down, that is 24,700. Okay. It is given credit balance. Then afterwards bank balance, that is given to you 5,450. Now the word bank balance is given to you. Actually it should be bank overdraft. The reason, because it is given the credit balance. So always bank balance will be having a debit balance and bank overdraft will be having a credit balance. So here it is a credit balance, so we'll write on the liability side considering it as bank overdraft. Okay. So you can see in the liability side that I have written bank overdraft, that is 5,450. Next one, that is suspense account, that is given to you 300. Now this suspense account is mentioned in the trial balance if the total of both the side is not getting tallied. But anywhere in our accounts we have not mentioned that suspense account. Okay. Now moving on with the adjustments. The first one, that is provide 5% interest on capital. Okay, so first of all we'll count the working note for the interest on capital. You can see at the last that I've shown the two working notes. First one, that is for interest on capital, and the second working note, that is for interest on drawings. Okay. Now interest on capital, for that you are knowing the opening capital that is given to you 20,000 and 30,000. Okay, interest rate that is given to you 5%. So for 20,000, 5% for the full year, that would come to 1,000. Now out of 1,000, already interest on capital that has been paid. As you can see, already we have written in the inner column for Harsha, that is 700. So 1,000 minus 700, outstanding interest on capital, that would come to 300. Okay, and in case of Chaya, total opening balance that is given to you 30,000. 30,000, 5% you will count. Then you will get 1,500. 1,500 minus already paid interest on capital for Chaya, that is 1,000. So 1,500 minus 1,000, that would come 500. That is outstanding interest on capital for Chaya. Now this outstanding interest on capital, that will be having two effects. Okay. So first effect, will add in the concerned interest on capital on the P&L appropriation account debit side. So Harsha, that is 700 plus outstanding interest on capital, that is 300 that we have counted. So plus 300, outer column you will write 1000. In the same way for Chaya, 1000 inner column you have written, plus 500, that is outstanding. So 1000 plus 500 in outer column, that is 1500. Now the second effect of this interest, outstanding interest on capital, that will be on the credit side of partners current account. You can see in the credit side of partners current account that I have written by interest on capital. Actually you can write by outstanding interest on capital, that is 300 and 500. Okay, whatever is outstanding, that second effect that I have shown on the credit side of partners current account. And then afterwards the first interest on capital, then after 6% on drawings. Now interest on drawings, that is given to you 6%. Okay, so interest on drawings you can see for Harsha and Chaya that I have shown in the working note. Harsha, that is 5000, and for Chaya that is 10,000. But we already discussed that for Harsha that was for 6 months, and for Chaya that was only for 3 months. Okay, so for 5000, 6%, and for 6 months, that would come to 150. Okay, here you can see 5000 into 6 by 100, that is 6%, and into 6 by 12 because it is for 6 months. Okay, so that came to 150. Out of 150, already you can see in the case of Harsha, 100 has been paid. Okay, so remaining outstanding, that would be only 50. So 150 minus 100, so outstanding interest on drawings, that would come only rupees 50. Now same way in the case of Chaya. In the case of Chaya, the drawings, that is 10,000, but it is only for 3 months. Okay, so 10,000 into 6%, that is 6 by 100, and into 3 by 12, that is for only 3 months. The value that came, that is again 150, same value. Out of that, 50 rupees interest has already been paid on Chaya's drawings. So 150 minus 50, so remaining outstanding balance of interest on drawings, that would be 100. So here you can see plus outstanding for Chaya, that is 100. So 50 plus 100, that is again 150. So 150 plus 150, total that I have written 300 in outer column. Just as outstanding interest on capital, the second effect that we have written on the credit side of partners current account. In the same way, outstanding interest on drawings, second effect that we'll be writing on the debit side of partners current account. So here you can see on the debit side of partners current account, last entry that I have written, to interest on drawings, that is in the column of Harsha, that is outstanding 50, and in the column of Chaya, that is outstanding 100. Okay. The third one, that is given to you 10% on opening balance of current account. Now current account balance, both the balances that have been given to you, we can verify. That is for Chaya, that is given to you 4,000, the opening balance of current account. So on 4,000, 10% you will count, then it would come to 400. So here you can see first entry that I have written by interest on current account in the column of Chaya, that is 400. And the simultaneous second entry, that would be on the debit side of P&L appropriation account. So you can see on the P&L appropriation account debit side that I have written to interest on current account of Chaya, that is rupees 400. In the same way for interest on current account of Harsha, here you can see two balance brought down, opening current account balance, that was 6,000 for Harsha. So interest on current account for 10%, that would come to 600. But over here already 500 is written over here because 100 has already been paid. Okay, you can see in the P&L appropriation account credit side, you can see in the inner column of Harsha that I have written 100, because you can see in the trial balance already the effect is given to you, that is of interest on current account of Harsha, that is 100. It means 100 was already paid. So outstanding, that would be only rupees 500. So this outstanding will be having two effect, that is one would be on the credit side of P&L appropriation account, and the second effect that would be on the debit side of partners current account. Okay, so plus outstanding, that is 500, so in outer column that would come to 600. And the second effect over here on the debit side of partners current account, that is to interest on current account in the column of Harsha, that is 500. Okay, now first adjustment is complete. Second one, that is provide 10% depreciation on machine. So depreciation we have already written in the machine, we have already written in the inner column, that is 40,000, 10% depreciation, that would come to 4,000 and 40,000. So 40,000 minus 4,000, remaining balance, that would be 36,000. And the second effect of depreciation, that would be on the debit side of P&L account. Okay, so you can see on the debit side of P&L account I have written to depreciation on machine, that is rupees 4,000. Third adjustment, monthly salary of Chaya is rupees 500. Monthly salary is 500, then for full year that would come to 6,000. Okay, so So here you can see to salary of Chaya. Already in trial balance the entry was given of 5,500. It means for 11 months salary, that is 11 into 500, so 5,500. So 11 months salary has already been paid. So outstanding salary, that would be only rupees 500, that is for only 1 month. So plus outstanding salary, that came to 500, 5,500 plus 500, outer column, that would be 6,000. And the second effect of that outstanding salary, that is written over here, you can see by salary, that is rupees 500 in the column of China. Okay, so only the effect of outstanding, that is given in the partner's current account. Then afterwards, fourth adjustment, total of sales book is undercast by rupees 300. Now sales book, the total whatever is was there, that has been undercast by rupees 300. Now that is the value of the suspense account. Whatever the difference, you can see in the trial balance, the suspense account that is given to you, the last entry, that is rupees 300. Now why that was not being tallied? Because the sales book value, that was shown less compared, that was shown less by rupees 300. Now we are giving the effect of that 300. Okay, sales book, that was undercast, so now we have to show the actual balance. To show the actual balance, we'll be writing on the credit side of trading account. So here you can see on trading account credit side, by sales book undercast, that is rupees 300. Okay, so 24,700 already the trading account balance that was given to me in the question, trial balance. So 24,700 plus 300 total, that came to 25,000. So that was the only entry that was remaining to be mentioned in the trading account. Because of that only we had prepared the revised trading account. Now 25,000 total both the side, and the new gross profit, that came to 25,000, and that 25,000 I have written on the credit side of P&L account, that is by gross profit 25,000. Okay. Now the last adjustment that is remaining, that is rupees 1,700 are to be transferred to general reserve. Now this is to be having two effect. One, that would be on the debit side of P&L appropriation account, that is to general reserve 1,700, and the second effect, that would be on the liability side of balance sheet, that is general reserve 1,700. Okay, so all the adjustments that we have completed. Now let us look at the trial balance, any of the hidden adjustment is remaining or not. We have already cleared for salary. Then afterwards, closing stock, already we have given only one effect. Insurance premium 3 months prepaid, that we have counted. Then afterwards, in case of loan also we have calculated, that is for 10,000, 3 months that was outstanding, and already interest on loan that we have counted, out of that 200 was paid, so only that was remaining 100. Then afterwards, any of the hidden adjustment is not remaining in the trial balance. All the adjustments that also we have completed. Now we'll close all the related accounts. First of all, already we have closed the trading account. Balance we have written on the credit side of P&L account. Now we'll close the P&L account. P&L account credit side total, that is coming 37,000, that I have written on both the sides. Difference that is coming on the debit side, that is net profit, already we have discussed. If the total of credit side is more and the difference comes on debit side, then it will be net profit. Okay, so to net profit, bracket I have written question mark to identify, to show you that this value that I have found out. So to net profit, that is coming 17,700. Now this balance 17,700, that will be transferred to P&L appropriation account. Whatever the balance, closing balance of trading account, that will be transferred to P&L account. Whatever the closing balance of P&L account, that is net profit or net loss, that will be transferred to P&L appropriation account. Okay, so here you can see by net profit credit side 17,700. Now we'll close the P&L appropriation account. P&L appropriation account credit side total is more, that is coming to 18,600. Difference that came on debit side, that is 8,000. Already I have discussed in the starting that no any profit and loss sharing ratio is given to you. So we'll consider the ratio, that is 1:1. Okay. So over here divisible profit, this would come divisible profit, and whatever the difference comes of P&L account, that we are calling as net profit, and whatever the difference comes of P&L appropriation account, that we are telling as divisible profit. Okay, that is to be divided amongst the partners in their profit and loss sharing ratio. So here 1:1, that would come to 4,000 and 4,000. Now whatever the divisible profit that came, that is to be given to the concerned partners. So it will be recorded in the partner's current account. So you can see in the partner's current account credit side, over here debit side, then over here credit side. By divisible profit, that is 4,000 and 4,000. Okay, so now we will find the closing balance of partner's current account. You can see over here the total of debit side is coming more. Total is 11,550, and for Chaya that is 10,100. I have not put the total over here on the credit side because of lack of space. So the difference that is coming on the credit side, here you can see buy balance carried down. That value that I have found out, that is the difference coming on the credit side. That is 7,250 for Harsha and 700 that is coming for Chaya. Now difference is coming on credit side. It means total of debit side is more. Total of debit side is more than it is debit balance of partner's current account. Okay, so this is debit balance that will be shown on the asset side of the balance sheet. So here you can see on the asset side that I have written current account of Harsha and Chaya 7,250, and for Chaya that is 700. Okay, so total that I have written in outer column 7,950. Okay, now we have cleared all the accounts. Now the last we have to tally, that is the balance sheet. Let us check that whether the balance sheet is getting tallied or not. You can see the liability side total that is coming to you 72,250, and on the asset side after posting the closing balance of the current account on the asset side, the total is also coming the same, that is 72,250. It means our answer is correct. The total of both the sides that is coming equal. So that was the end of this sum. Students, do revise it again from the video lecture. In the next video lecture, still will be continuing with this type of sums. These are very important sums. Keep practicing. Goodbye. Stay blessed.